So we promised you this amazing interview with the person who pretty much handles the biggest real estate firm in the region, and that is Knight Frank. Her name, Judy Rugasira Kyanda, and she's here with us this morning. Good morning, Judy.
Good morning, Marcus.
How are you?
I'm very well, thank you.
Okay, so now, my question for you, Judy. First of all, how's lockdown treating you?
Not bad.
Not bad at all.
Oh, yeah.
Okay.
So you're an essential worker, or you're on the other side with the other people, the other.
I'm a bit of both.
Oh, okay.
Yeah.
She's managing. Yeah, she hasn't. We haven't killed the people at home yet.
Not yet.
Okay. The
We're
president.
coexisting very well.
Fantastic. The president says that people are really suffering.
My friend.
In your opinion, what do you think is the impact of COVID-19 to the real estate market?
Oh, I think like any other market, it's been hit by the pandemic. I think it's driven the global economy and global businesses generally into a recession. Some have been harder hit than others, obviously. Even property as an asset class and also across the property sectors has suffered. For those who can work at home, it hasn't been as bad as the retail sector, for example. So the office sector, corporate workers who can work from home, it's been slightly easier for them, I would say. Not 100% free-flowing, but it's been easier for them than, say, the retail sector. Because obviously, the retail sector has been closed, shopping malls have been closed, apart from the essential services. So that has been really tough. That has been very tough on business generally there.
I spoke to somebody who, after they sent them home, realized that they could actually work from home. So they gave notice to their landlord of their office. And they told the guy, look, bye-bye. This is 1 month's notice. Here's your 1 month's rent. We're not coming back. Is that, in your opinion, a current trend of people realizing I actually don't need this office space?
You think people are going to move now completely and
then not need it?
That's a very interesting question, and one has been going around, and a discussion that has been very present in people's lives. I wouldn't be quick to say that the office will stop being an integral part of work, of the workspace. I think it's too early to say that now. But what working from home has certainly proven is that it can be done.
Yeah,
it started off initially as an experiment, but it's an experiment that has worked very well.
Yeah.
And people have found that they can actually be productive, and they can carry on with work pretty well. So the digital technology has helped a lot in this, for those who are more technologically savvy, and it has certainly become more of a conversation now for many corporate companies who realize that actually it is an option. I wouldn't say that it will take over completely. I think it might be a binary option whereby you can. It will never be it will be an either or. Yeah, it will be an either or. Maybe, and especially with the social distancing rules that are coming in, you might find that because of the shift work, to be able to achieve those guidelines or to adhere to those guidelines, you have to work in shifts, whereby you have some people working from home and others coming into the office, and they take turns to do that.
Yeah.
Because you can't, expand all of a sudden and immediately, because people are still watching their bottom lines and their cash flows. So I think it might be an option that coexists, working from home and the office as well. I wouldn't be too quick to do away with it yet.
Not at all.
No.
So what about for that specific industry that you're in, the real estate industry?
Yeah.
Is it practical to move things online?
Yes. I mean, look, PropTech is taking a front position in the way we work now. We're getting more into virtual tours of property, for example. You can take a client through a property virtually, so you can be able to.
Can I show you my car and I tell you this is it? You're never going to see me.
Your land might be a bit more tricky. I think it's something that you need to see with yourself. Yeah. But certainly viewings, residential viewings, even office viewings, you can be able to do virtually. Yes, that's true. That is true.
Because if they can kufera you when you are seeing the property, imagine it could be fun.
That's why you have to get a trusted estate agent or a property professional.
Yeah. I guess.
But there's some services that obviously you can't do that. Valuations is one of those, because it's one way you have to be there physically.
Yeah. You like, again, on the same aspect, you employ what 150 people plus?
Yes, thereabouts.
have you laid off? Can you speak to that? Have you laid off people?
Yes, I can. Yes, I can. We haven't gotten to that, and we'd rather not even get there. But part of the advantage of being part of a truly global network is that we are able to share knowledge and information across the network. And the UK parent office obviously were hit before we were, and they suffered the crisis before we did, or the virus before we did. So they were able to share and let us know that it would be a good idea for you to get into your contingency planning now, okay, and do your business plans in the event that it does move to your regions as quickly as it's done here now. So we had a chance to do our contingency plans. By the end of February, we'd done our contingency plans from working from home. We'd experimented about working from home, and it was working well. All the service line heads, all our heads of departments were able to work very efficiently from home. That also means that we were able to look at our business plans and start revising them, okay, or taking a realistic look at them as early as the end of February, March. So we've been able pretty much to track what's happening and anticipate the lockdowns as they come on without taking too much of a hit on our staff count.
Yeah.
Which aspect of real estate has suffered the most with this whole corona?
I would say retail, without a doubt. Yeah, I would say retail. The decline in consumer spending is something that's really trickling straight through to the landlord in terms of no rents being paid, but also the retailers themselves. They're closed down, apart from your pharmacies and your restaurants, which can do takeaway business, and your supermarkets.
Yeah.
Interestingly enough, supermarkets for the month of April, our research found that for supermarkets, particularly the ShopRite supermarkets, the shopper numbers reduced by about 67%.
67?
Yeah,
wow.
67%. Sales went down by 47%, but basket size increased by 63%. Now that's very interesting, and it probably speaks to the fact that people were
Panic buying
or buying a lot more than they usually do in the event that they might not be able to get to the supermarkets. But certainly all the other retailers have been really, they've been hit quite hard.
If for the supermarket, and this is just me thinking, does that mean they made more money or less?
No, obviously the sales are not optimal. They're not where they would have been had people had the flexibility.
4 people buying 3 times what 9 people would have bought.
So she was talking, and then at some point math came in and
We're discussing real estate market in Uganda, COVID-19 impact to it. And before I get to what my real estate guru told me on whether that I should find money and buy land now, let me first ask, we've taken a hit, that's like any other business, and the real estate has. If you're just joining us, she mentioned that clearly. Is there anything the government can do to help?
Yes, I think there is some help that government could render to businesses generally. They're yet to pronounce themselves on the stimulus package or the interventions that they're going to be put forward or be forthcoming with.
Yeah.
And we're looking forward to hearing those. I'm hoping they will come. I read somewhere that the IMF has extended a
491 million.
Yes, towards that. So hopefully that should go, a long way in helping businesses generally, especially SMEs.
Yeah.
And some of that should trickle down to the real estate sector. Like Kenya, the Kenyan government, for example, have reduced, PAYE by 5%. They've reduced VAT from 16 to 14%, and corporation tax to by 3%. So there's certain interventions that government could do that will trickle down and impact positively on the bottom line of SMEs. So, and certainly that would help, the property sector as well.
Construction. There are people who, and the president even said, if you have a construction site, go ahead. There are places that I used to see working non-stop, they've automatically stalled now. I've seen others continue. What's your take on the construction industry? Do we expect to see more or less continue? Do you see things stalling?
Look, I mean, the big construction sites that were already in progress will continue because, they've already got
It's
their
been planned
funding in
for, yes.
place. Yeah, they've already got their funding in place, their financing in place. So I think that will continue. But we have to also be mindful and remember why we are in lockdown. And I think that's something that people are very quick to forget. And when we do go out there, we have got to be mindful of the, standard operating procedures and the social distancing guidelines that have been put forth. Because in our rush to get out there and get business going again, we might lose sight of the situation that we're actually in. So it's all very well they're out there working again, but must be mindful because we might end up losing, traction and all the mileage that we've made from staying at home. So it's good that the president is gradually, opening up.
Yeah.
But I think we just need to be mindful of that as well as we work.
Okay, so what about Marcus's border guy who told him to buy now? You and I both know it was a border guy.
Is my landlord?
No, please, no. Yes, I told you, border guy. Border guy. They have the best leads.
Oh, yeah.
But what about when we talk numbers?
Yeah. I'll be very mindful of speculation.
Yeah.
We've been in a period of lockdown, and it's very difficult to tell pre-lockdown what is going to happen during lockdown and post-lockdown because the market literally stagnated. Nothing has been happening. There haven't been any transactions because the lands registry has been closed down. There's hardly been any rentals, any rents, at least for, in the office space.
But pre-lockdown, we're in a boom, though.
Well, I wouldn't call it a boom, but the market was certainly, it was getting
vibrant.
back on its
Yeah.
feet. Yeah, it was vibrant. It was getting back on its feet. There are a lot more inquiries in the office sector, and there were transactions taking place. But I wouldn't be quick or I wouldn't rush into saying that, now is the time to buy because prices are going to go down. We don't have any numbers to back that up.
Yeah.
And I don't think anybody is going to come on the market desperate as they are and just give their property away at a giveaway price.
Yeah.
I don't think that is going to be the first reaction. Actually, what I think will happen is people are going to get back into work, are going to sort of sit back, like the president was telling us,
Let things stabilize
a little bit, see what's happening, and then make decisions how to proceed. So I would be cautious, Marcus.
The Ugandans who live abroad, the numbers I have are 165,000 Middle East alone. And they send to Uganda about 2.4 trillion shillings. And 70-80% of that money normally is to Gure Taka, Gure Nyumba, etc., Zimba, all of the above. Do you think that's going to be affected? All factors considered, knowing that what's going on in the Middle East and the fact that they don't have... So the 2.4 trillion, which is supposed to help with the real estate market, from these numbers should drop. No?
Well, I mean, look, those are their earnings. That's what they've been being paid every month. Now it depends. Has their salary been
Cut.
And by
Have
what
they lost
amount?
their jobs?
Have they lost their jobs? So there are many variables. This is a very unique crisis. It's a very different crisis, okay? And there are no definite outcomes to this crisis because it's very unique. We've never had anything like this before.
We're seeing it for the first time.
So it's very difficult to actually project the outcomes of this crisis economically or even on the real estate.
We have no benchmarks. We have
Absolutely.
no...
I mean, usually, the property sector is hit by crises like, undercapitalized banking, over leveraging, negative market sentiment, and these are things that you can work with. You can predict the outcomes. You can work towards predicting or towards a certain outcome. But this one is just totally unique, and it's very, very difficult to sort of predict what the outcome is going to be of anything.
If you're just joining us, with us in studio is Judy Rugasira Kyanda, who is the Managing Director, Knight Frank Uganda. And we are discussing the real estate market. They happen to run one of the biggest in the region. And we're trying to find out what you think about the real estate market. If you're just joining us, she said it's too early to speculate, to think, to buy, to sell. Everything that we're going through is unprecedented. Therefore, decisions shouldn't be rushed. Now, the president did speak to landlords and advised them on being understanding in this time. As one of the biggest landlords that you are as Knight Frank, what is your strategy on this matter? Are you waiving? Are you... Stanbic Bank has asked anybody with a facility, you have a 3 months holiday to do this. what's Knight Frank's strategy, if you can say?
Yes, absolutely. I think for us, what we're doing, and as we've always done, is to engage. We engage a lot with both the landlord and the tenant, because obviously as the landlord's representative and the tenant's representative to the landlord, dialogue is important. I think for anybody to think that they will, take the high road and just decide to do what they want to do is definitely not going to work. This is a time to relate. This is a time to sit down and dialogue and talk and reach an agreement. It's nobody's fault at the end of the day, as you said, unprecedented times. This is a pandemic that just fell on everybody and unplanned for. So I don't think it's time to sort of lawyer up or toughen up and be completely despondent and say we're not going to pay rent because the president said we shouldn't pay rent. I think what he was trying to say is there should be some understanding between the two parties. I don't think what he meant was that don't pay rent and landlords should waive off rent, because I don't think a lot of them even have the liberty to do that. It will take a multi-sectoral approach to this. As you know, our commercial real estate sector is heavily debt dependent. So they have obligations they have to fulfill. And they can't a lot of these obligations also are pegged to the cash flows or the rental income streams from the properties. So they can't just wake up and say, okay, we're going to give you 3 months rent free. It doesn't work like that.
They also have...
They have to fulfill certain obligations. But also, tenants should understand that they want to have a good relation moving on with the landlords. So the best thing to do, and first and foremost, is talk to your landlord, get your lease document out. You have a binding contract at the end of the day. Some of those contracts have provisions that let you do that. I'm getting to that. I'm getting to that, Kitui. Some of those lease agreements or tenancy agreements have got provisions that will let you deal with that whole situation. And those that don't, you can sit down and discuss and find a way around it, as many of our landlords and tenants are doing. And we're finding that, we're managing to broach that whole issue quite fluidly. Now, this is a time also for us to sit down and review how we're doing business. For the landlords and the tenants that don't have tenancy agreements, now is a time when you realize the necessity of having one at the end of the day. Because, if a tenant decided, look, I'm not going to pay and I really don't have to pay, and you know what's happened and you should understand what's happened, I'm off. Then it becomes a lot more difficult to enforce your relationship.
Then the lawyering up becomes the only option.
And it becomes difficult though, because you can't enforce, it becomes a lot harder to enforce something that is not, you can't really prove explicitly. So I think now is the time for them to look into that and to appreciate the importance of regularizing and formalizing these relationships. But my advice is sit down with your landlord, talk to them. If you need representation, get a professional consultant or a property manager to help you sit down and
work out a plan.
And a way to move forward.
As the rep of both Knight Frank, how are those conversations going right now?
They're going very well, actually, because I'll tell you what, the landlords also are very understanding people. Okay, they're not in a vacuum. They know what's happening. Much as they're going to be impacted, at the end of the day, they also want a relationship with their tenants. But the tenants also have to be understanding and realize that it is not as straightforward as just waiving off 3 months or 6 months rent. It really, and it's not fair either, because they have to share the consequences and the impact of this pandemic.
Plus it trickles down,
Absolutely.
doesn't it? So they're also talking to the banks about the loans, and they're so they need the banks to understand the way they have to understand.
And in some instances we've seen landlords who are willing to give concessions, not necessarily waiving off, but to give certain concessions that have been mutually agreeable to both parties.
50%
pushing
for now.
It by a few months. There was, I think, correct me if I'm wrong, there was talk of a conference. I think there was planned to have a conference somewhere in November.
Yes, there is.
Are we still optimistic about that? Do we still think it's...
Or do we move it on?
The way things are going?
It's very much dependent on how things go.
We still can't tell yet.
We still can't tell yet. And they'll have to hire a very big hall, because then you have to observe the
social distancing.
Yes, of course.
Kitui, Judy, Rugasira, Kyanda, MD Knight Frank with us this morning, trying to talk about real estate and understand the challenges COVID-19 has brought into that sector. We are at the end of this amazing discussion, and foreclosures, the people who are thinking of it, want to do it, should not do it. What's your take on how that will happen? or should happen? Foreclosures, do you see it happening? Do you see banks coming up and saying, yes, we know, we understand, nae osusse?
Well, I think banks try as hard as they can not to go that way, if they can. And I think the Bank of Uganda guidelines on restructuring loans and giving some relief to borrowers is aimed towards that. However, that said, there is a projection that non-performing loans are going to go up from 4.5% to 10%. So I think it's inevitable that there will be
a couple.
There will be a couple. But certainly I think the banks are trying to avoid that as much as they possibly can. And borrowers will have to try and find ways of avoiding that if they can. But I won't rule it out. I think at some point it will happen. It's inevitable, given the business environment that we're going to be operating in for the next foreseeable future.
Someone gave me, and this is not real estate related, this is just a conversation. Someone told me that this is probably going to widen the economic gap. Do you think so? The rich are going to get richer and the poorer might die?
I think everyone is going to take a hit. It's just that the scale of that hit is what is going to differ. But I think everybody will certainly take a hit. Retained earnings have been affected for sure. I think profit margins are going to be hit as well. We'll see a margin there taken off retained earnings, profitabilities, because the bigger market, the informal market, can't afford anymore. The consumer spending has reduced, has declined considerably. So I think there will be the hit will be relative, but everybody is going to suffer.
As we wind up, your parting shot to anybody interested in real estate, dealing in real estate would be?
My parting shot would be that both as an asset class and across property sectors, property remains a very good investment to make still. I think it's a very robust and resilient asset class, particularly as part of a diversified portfolio, and it's certainly one that manages to bounce back. And the Ugandan property market especially, I find is very resilient. I don't think we've had a crash yet where the property market has completely crashed. It's had its shocks, some of which have been quite violent, but it always manages to stabilize itself and get back on its feet. So I still think it's definitely an asset class that people should not lose faith in at all.
You see, these ones who have cars, were telling us who had land to get a car.
And these days it's not enough to have a car. Does your car have a sticker?
You see, your cars are parked like our land. So really,
and as we wind up at the housing baraza, when the one that we hosted, there was a big debate about the price inequality of land and the reasons why that was happening. Do you think that post-COVID it may sort of stabilize to a reasonable amount? Because there are places where the land value is unexplainable by any standards. Like really, why? And the reasons you would then find out is because the neighbor was bought by an Egyptian.
Your friends, these ones of one and two.
Especially those ones.
These ones.
No, anyone with a number to their area code. Chanja 1, Chanja 2, Nigeria 1, Nigeria 2, those ones. Do you think that post-COVID will get us, it will be a stabilizer? COVID will at least get reasonable prices, or it's going to remain the same as was?
I think it will slow down activity, but with a view to it picking up in future.
Does slowdown activity equate to price reduction?
In some cases, relatively so, but not necessarily, because I think those remain growth areas. Those remain the areas where people are being drawn to for development, for home ownership, residential development particularly, and that's your affordable bracket.
Yes.
So I think that those areas are going to continue growing, albeit at a slower pace. Secondly, if you look at the way infrastructure is developing, it's along those areas. Road networks, utilities, services, different amenities are coming up.
The town's moving.
They're becoming suburbs in their own right. So I think that is going to continue. I don't think that will necessarily stop because of COVID-19.
And that's not a bad thing.
Not at all, not at all. I just think it will slow down. But listen, there will be life after COVID-19 also. I think this is something that will be different. It won't be the same, but it will definitely, we will continue living, and hopefully we will get over this as well. And life should continue at the other side.
Judy, thank you so much for your time.
Thank you, Marcus.
For making it this early morning. I now allow you to go back and quarantine yourself.
Back to non-essentialism.
She said essential Sundays.
Auntie, she said both. So this
was the essential.
part of the day. Now.
Thank you so much. Have a great day.
Thanks for having me.